It's 5 minutes after 10. And he didn't bring copies for his proposal.
Well, I actually brought 4 copies, but I brought some stuff that we're not, I'm going to talk about today, but I'm not actually going to disclose because it's open forum. So I'm going to talk about it, but I can't hand that information out.
It's got names on it.
It's got names on it. So we made some copies of what we know we can hand out and we can talk about. So we'll do that. Joe.
Give you that. Let's see, Kelly, you need one of those? Who all?
I'm gonna have one extra to give to Molly because she's on this committee. Well,
You always give the lady back here one.
Will anybody else need one or will I do one?
I think that'll be fine.
Okay.
got enough for her.
Hello.
Good morning.
Good morning.
Are we ready?
Anything?
All right, if you're ready, we're ready to hear your proposal for this coming year.
Okay. Well, Board, Judge, thank you all. We certainly do appreciate it. Thank you for allowing us to handle your insurance this past year, and we look forward to handling it in the future. Hopefully, things work out well for that. And but today, we're going to kind of talk about your situation for the year as far as claims and how you're running for the year. Now, we don't actually have a renewal proposal today. That won't be here for probably around the first of next month. It's generally about 60 days out. So is when we'll be getting all the renewal information, everything else to sit down with you all and kind of review that. Today, I just wanted to give you an overview of where you're at from a claims perspective, kind of give you guys an idea of what maybe possibly to expect, and then kind of talk about the coalition.
Let me give you something to expect. We're going to have our budget together to present to the full court in November.
Yes, sir.
So you can't drag along too far into the end of the year.
Yes,
We
sir.
have to have a proposal for next year.
And we will, sir. Yes, sir. And that'll be way timely as far as us is trying to get into that budget season, but absolutely, we'll be able to do that. Let me share with you today kind of where we're at from a claims perspective. If you look at this is just what we call an aggregate report, and I'm going to kind of walk you down each one of these columns. So that you all understand what sort of program you're in, and I'll kind of preface the sheet here. You're in what we call a level funded, self-funded arrangement. And what that means, it's kind of a hybrid between a fully insured program and a self-funded program. It's a model that actually looks like a fully insured plan, but it's built on a self-funded chassis. So what we do is we simply go out and we go to the reinsurance markets. We have a third-party administrator, which happens to be Performance Health. Right now we have Gerber as your reinsurer on the what we call specific and aggregate, and that's what we're going to talk about, your aggregate attachment point here, so that you all kind of understand. When you pay an X amount of dollars on a monthly basis, those dollars are distributed out. So a certain amount of those dollars go into a claims reserve to pay claims. A certain part of it goes to fixed cost, and fixed costs simply are part of the reinsurance premiums, the third-party administrative premiums, and that sort of thing that they charge to administer their program. Now, ultimately, at the end of the day, when we put X amount of dollars into that claims account, if you have a good claims year, those dollars are still your dollars, unlike a fully insured healthcare program, like a Blue Cross or Humana or whoever it may be. Once you pay premiums into those carriers, they're gone forever. So it doesn't really matter what your claims are for the year. You're either going to look at getting a rate hold primarily, or which you very seldom see in that world, or generally a pretty substantial rate hike. but it's all based on claims. So you all know that at the end of the year, you're going to be charged X amount of dollars. You're going to pay that on a monthly basis. And then at the end of that contract period, your rates are all depending on claims paid, claims dollars paid out, and premiums paid in. So that's the way insurance works. The beauty of this program is that we currently now have, I think we have about 12 counties. We just added Phillips, added Hempstead, added Clay. We're growing this healthcare coalition. I think we currently have 12 counties in the program now to build it. It's actually, and I brought a few of these to share with you all, but it just kind of helps understand the healthcare coalition. I probably got enough here, pretty close. I just brought some of those to just kind of share around. But basically what we're doing is we're block and pool rating this program. So as we go on, the more counties we get involved. Right now we're quoting some of the very large counties for a 1/1 effective date to come into this. I think between the 12 counties that we have in the program right now, I think we have somewhere around 2,200 employee lives. So it's growing. With a coalition, what we're doing is spreading the risk. So I want to help you understand that. If you were with a Blue Cross or Humana, basically you stand on your own. So that simply means that claims incurred, if they're really bad, they don't get spread among a group of people. So we're excited about the coalition, excited about the growth. All the judges have been just unbelievable in quorum courts that we've met with about participating in it and trying to grow it. So as long as we continue, now we did actually take and add, we currently added some counties into Missouri to grow that coalition. We have Laclede County, Dunklin County. We're actually quoting Stoddard County up there on it right now. We actually moved it into Mississippi, and we have Carroll County. So what we're trying to do is continue to just grow and grow and grow that healthcare coalition so that in the healthcare world today, and I've been doing this 44 years, so kind of gives you my age. It's all I know is insurance. Started when I was 20, but healthcare today has gotten complicated. I mean, if you don't find a way to spread some risk, you're always going to be fighting that battle of huge rate increases and not really getting anywhere as far as healthcare is concerned. And then ultimately you want to provide the best healthcare you can provide for your employees, which that's always important, at the most affordable cost. So when you look at what I'm going to share with you today is your own individual claims losses. Now we are gathering information right now. Our third-party administrator is putting together a coalition platform that will help us and all the judges and quorum courts all understand the entire book of business, as we call it, and spreading of the risk and that sort of thing. So when your renewal comes out, thank God it's not going to be based on claims experience this year. I mean, it will be, but it won't be in full. And hopefully you all understand that. When I share some of this claims data with you today, we've got some pretty large claim issues going on out there today with some employees. It's nothing that, good Lord, can only control that. Ain't nothing we can control, so we just have to prepare for it. Thank goodness we are in a coalition to hopefully spread some of that risk this year to keep you from having a very substantial rate increase. I guess if I was to look at your program today, if you were standing on your own and I had you with United Healthcare, Blue Cross, or Humana, whoever it may be, I would be looking at a very, very large rate increase today. You are currently in what we call an aggregate stance. And an aggregate simply means that when we bill this program and you pay in your 12 monthly payments, we can't call you for any additional dollars. So that means if your claims or claims dollars that are put into your bank account, if claims exceed that, then the reinsurer is the one that's actually paying those claims for you, so that they don't cash call you for it. And there is no additional cash call. So that means if you end up upside down at the end of the year based on claims dollars paid in, then the reinsurer is responsible for paying those claims the way we built that program. So there's no additional risk or exposure to you as an employer, and that's the way you always want it to be. So today, I'm going to walk you through this aggregate report and help you understand where you're at, and I'm going to walk through some high claimants with you to kind of help you understand that also. If you look at this sheet, basically what you see is this is your total number of employees, in other words, and that's counting employee only, singles, employee children, employee family, and then it gives you your totals right there on a running 12 months. So you can see that 183, 184, so it's kind of ranged right now. You're up to 190 through the month of August. Your monthly attachment points, so when we pay in your monthly premiums, what you're paying into a claims reserve or what the reinsurer says based on these numbers is what you should be funding to. You can see that running total there, 79, 79, 80, 80, 81, 85, and you'll see that at the bottom down there being $656,337. So that's what your reinsurer says out of the claims dollars that are coming in is what you should be funding to. Now, funded year-to-date attachment point is the next column right there. So it's just basically showing that as an accumulation. So that's 656, 337 matches the 656, 337 below it. If you go over to gross claims paid, you can see the running total of claims dollars that have been paid out to date, and we're at $653,768 of actual paid claims today. So there's not been anybody at this point that has exceeded what we call your specific deductible. In the reinsurance world on your contract, you've got a $100,000 specific limit built into this program. So that means that all claims that are incurred up to $100,000 and then aggregate towards the annual aggregate attachment point is basically everybody right now is under that $100,000 on specific, but we do have some claims I'm going to share with you in a moment that are going to probably or possibly exceed that $100,000 specific limit. Now that's money that doesn't come out of your pocket, the reinsurer pays that. So it just simply says that you're going to simply continue to pay in those monthly payments. Claims dollars will come out of those claims dollars. Right now, to date, there's approximately $400,000 of claims that the reinsurer has to advance on your aggregate. So we're about $400,000 upside down, so that means that you've spent about $1 million so far in claims to date, and we put $656,000 into a claims account. So right now we are running at about 160% loss ratio across the board. So that's why I said if you were with a traditional healthcare plan, it would not be a pretty picture at this point, simply because if you were at 160% loss ratio, you would get a very, very substantial rate increase.
What do you call substantial? Because I remember what they were going to do when we had a lot of big claims. Because when we were with the other company, I remember what their substantial increase was going to be that year that we switched to y'all. So
Yeah.
what do you call substantial?
Well, it's, when I say substantial, generally what I see, because I do have other companies with these other carriers, that are not in a healthcare coalition. And generally, if you were looking at 160% loss ratio, you'd probably be getting in the 50% rate increases with a fully insured carrier if those claims are ongoing. And so, you know, and you have to understand the healthcare world, ongoing claims depends on whether they expect those claims to be incurred the upcoming year, whether they're ongoing, what is the, you also have to kind of take into consideration that if you're sitting there, and I'll give you just a for-if example, if you were sitting there with a cancer patient, but this cancer patient's already gone through radiation, chemo, basically has been given a good bill of health, at that point there may not be an ongoing, from an underwriter's perspective, they may be looking at that as a one and done, I guess, is what you would call it. We see that from time to time. You may see a person, I had a particular case the other day that had the largest claim I've ever seen since I've been in the business, just over $3 million on one individual. That person was a dependent, happened to be on the plan. The employee termed, did not elect COBRA. Thank God that came off of that program. So, you know, there's no way in the world a reinsurer, if that plan had stayed on, I mean, if that individual had stayed on the plan, would have rated that group to the whatever max they could reach, because they were losing money. And they were going to lose a substantial amount of money. So,
Throw our figures in with the other figures, where do we look?
well, that's where I'm working on those numbers now. We've gone and we've got our third-party administrator compiling all of the claims.
Other counties?
Yes.
That's with the other counties?
Yes,
Okay.
sir. And that even includes the ones we have in Missouri and Mississippi that we've added to it. So I think right now we have about 16 or so counties, and we actually have one city that we added to it. So it's, you know, cities,
Is one reinsurer doing all of the claims?
yes, sir.
All of your claims?
Yes, sir.
Are you having any problem with your reinsurer right now? As far as
No.
Okay.
No, I mean, you know, reinsurance is just, I mean, when you get into this sort of arrangement, it's basically buying direct.
Right.
You're just simply going to the reinsurers and they're pricing out the models for the new year. And so we're gonna try to look at a composite across the board, on those rate increases, and hopefully some will be running a little bit better than you all, and ultimately at the end of the day, we'll see a pretty good rate increase across the board. Today, I guess from a budget perspective, if you just had to ask me generally today, knowing that we do have a bunch of other people to factor in, I'd probably factor in somewhere around an 18% or so would probably be fair. It doesn't mean it's gonna be that. I'm just, you know, I'm just kind of giving, I'm just giving you an adjustment or a number that I'm ballparking based on the fact that you've got a very
Well-
large group of people in numbers.
When they were their increase was gonna be about 12%. And we had a cancer patient that was not cured, that was still seeking treatment. And we also had another person that had some serious health issues and was constantly keeping our bills up pretty good, a lot more than this. So, and theirs was 12%, so.
Well, I'm not saying it won't
I'm
be.
just saying, I'm just throwing that out there for you to know.
Well, you know, anybody can buy business.
Right.
I mean, you know, in the world of healthcare today, a company's not going to continue to lose money in the fully insured world. I mean, they're not. I mean, they're going to look at your risk too, just like anybody else would. So, you know, hopefully we can continue to build this thing. Hopefully you all will see the value of spreading that risk corridor among a bunch of counties and continue to stay in the coalition if we can come up with a good. And here's the difference between theirs and ours so that you understand this. When you get a rate increase on our model, that money goes into your bank account. it's not lost forever. So in other words, you could have took a 12%, and they may have taken a chance on writing you. If you'd have ended up not paying out the claims dollars that they rated you for, you would have lost those dollars forever. So in our case, that money just simply goes into a cash account. So it's your bank account, just like this aggregate attachment point that we're working off of here. So I just want you to be aware of, that's a big difference there.
That doesn't make any sense to me.
Well, it does, okay, it doesn't to me.
Yeah.
So what my question is, if it's a coalition and you're using all of the counties together, then I don't understand why you're still separating them, because I would think that would be the whole purpose of the coalition, is that you would have some counties that would be above and some counties to be below, and at the end, it would even everybody out, and the more counties you had, the better odds that that was going to work. So some years, I may give my money to a different county, whereas that county may give me this money, and so with the numbers you're talking about, I would not think that there would be anywhere near that kind of increase.
You would be looking, and you're saying exactly what I'm saying. That is the purpose of the Healthcare Coalition, and hopefully you did understand that we are going to be looking at it as a whole. What I'm sharing with you today is your claims
Just us
experience.
together, got it. Okay.
And so I want you to understand the situation and the position you're in. If I go to the market and I go to Blue Cross, Qual Choice, Humana, whoever it may be, and I take this claims information and I bid this out, which we're glad to do, and if we bid this out for you, they're gonna rate you based on this experience.
Right.
I mean, you know that as well as anybody else. So they're gonna give you, if they see that this plan lost $400,000 on you this year, that's not gonna be a pretty increase, a pretty rate either. So, I mean, they're not gonna take on a $400,000 risk corridor and say, hey, we're gonna maintain those same rates that you had for the year. So, Judge, let me, you said you didn't quite understand the aggregate attachment
Now,
point.
the question I
but-
want to ask will help me understand it. You said the money that we put into the premium,
Yes, sir.
if there's a surplus in there, it's our money.
It's your money. That is correct.
You'd write me a check if we change companies.
Well, you wouldn't want to write a check because you pay taxes on it, but you'd want to roll it.
I want you to answer my question.
Okay.
If we changed companies, you'd write me a check if we had a plus.
That is correct, sir.
We thought, and I thought we were paying a flat premium for the year, and we weren't any co-insurance that you mentioned 2 or 3 times.
Co-insurance. I'm not following you now.
Misunderstanding. He's saying coalition, he's not saying
Coalition.
I
co-insurance.
understand that,
Co-insurance.
Fred, I understand he said coalition, but you were talking about we might owe some more money?
No, sir, I didn't
Okay,
say
go
that.
ahead.
No, sir. No, I'm
I
saying,
misinterpreted what you said.
yes, sir. No, sir. I'm saying that your reinsurance
You're just a
contract.
good insurance man.
Well, no, well, I've been doing it 44 years, and that's all I know. And you know, if you ask me to tell you something about a farming operation or something else, I'd be clueless. But I do know healthcare, I mean, we have accounts as far north as Bally's Lumber out of New York, and as far as Seaman Holtz out of Florida. So we have accounts all over the country. So I can tell you a little bit about every state and how healthcare works in those states. But no, sir, this plan is, you will not pay in one more dime than what you pay on a monthly basis. It's all built. It was prepackaged. It already had your admin cost in it, had your reinsurance premiums in it. But there is a certain amount of money, when you look at this aggregate attachment point that I just shared with you, out of the premiums that you pay in on a monthly basis, currently, right now, there's about $80,000 going into your bank account. That's the aggregate, so that's going into that claims account. Now, we will pay claims
Is
out
that
of.
monthly, 80,000?
Yes, sir. So that is equated to about $636,000 year to date through August. And those monies are going into that account We're just simply, as claims dollars come due, we're paying those claims out of that account. Now, if you exceed that, and that's what I was saying today, that's not money you owe, the reinsurer's paying that. So based on the reinsurance contract, if you exceed claims dollars, they have to be paid by somebody. So the reinsurer's paying those claims with the anticipation that, I'll give you an example, if they advance you $400,000 to pay these claims, you're putting in $80,000 a month for the next 4 months, you've just put in $320,000 more dollars to cover those claims, but that means if they advanced you 400, you're still short 80. That doesn't mean you owe it, they pay it. So that means that it just costs that reinsurer a substantial amount of money. If you,
Basically, they're gambling on us being healthy.
well,
They're gambling on the coalition.
on the coalition, that's you got it right.
Well, I'm curious why you don't have the coalition numbers. I mean, why, surely somebody in the coalition's doing a whole lot better than we are, obviously. I mean, and you do have the same reinsurer for every county, right?
Yes, sir.
Okay.
Yes, sir.
It's all one big plan and everybody's the same participants all the way around.
Yes, sir.
Cigna's the insurer and you've got a reinsurer. You can't tell me that you're into August and you don't know where the other companies are.
They are doing an analysis right now on all of the groups pooled together for trying to come in for January 1 to kind of get an idea of where we're at. And hopefully that data will be available to share with you all fairly quickly, way before budget season in November. So, but we'll be able to share that data with you as soon as it comes out and let you know kind of where the entire coalition is, what it's looking like. But I've got some stuff that I can't hand out to you because it actually has names on it. But I'm going to give you a quick idea. Some of the large claimants, we have one individual that has incurred $289,865 worth of claims. We've got another individual that's incurred $210,956. So just picture that alone. That's $500,000 on two individuals. Now, there's not a thing you can do about it or we can do about it. That's just that we've had that incur. We have another individual that's incurred $134,000 worth of claims. We have another individual that's incurred $114,000 of claims. We have another individual that's incurred $109,000.
That's our county.
Yes, sir.
Look there and see what I incurred, Norville, Norvell. I'm serious, I want to know.
Well, at this point, you're not on this list, so
Basically nothing.
No, I had knee surgery, and it was very,
Yeah.
it was very expensive.
Oh, yeah, but I'm gonna tell you right now, the figures that he's giving you right now are still small figures when it comes to health insurance today.
Yeah, you're probably right.
I mean, I know I am. My dad had a car wreck and.
I know.
and
it doesn't take much today.
It's $1 million claim.
But let me tell you some things too, and I'm just reading these off so that you do understand. It's not just the entire group that's causing the huge claims. I mean, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 people listed here, which has basically incurred about 70% of your claims. So
That's pretty typical though, isn't it? I mean, that's kind of the way it usually works. You only have a few people that really, I mean, and you just, again, you're kind of gambling. So without the other numbers, I mean, I get it that we're not doing great, but with the other numbers, I would think it would, again, kind of level it out. So I understand what you're saying, but is there any reason to continue to belabor it?
You talk about as far as, no ma'am, I mean, I was just sharing with you the idea that it's not when you underwrite in our business, when a reinsurer looks at your experience and risk corridors, they are going to look at these claimants in case management, ongoing. I have case management reports here. I can't share with you, but I do have those. And that kind of gives, from a case management perspective, it does give us an outlook of what sort of treatment to expect as ongoing from these individuals and that sort of thing. So, but I just want to share that. But let me help you also understand. Yeah.
I was teasing, I'm sorry. We gotta get rid of some of these vendors. I was teasing, I'm kidding.
Well, let me share some of the things that we're very excited about. And it's how to take a coalition and grow it to be efficient with claims dollars. We have just, I'm working with Todd Curry at Baptist, and y'all know the new Baptist Hospital in Crittenden right there, thanks to Judge Wheelis. Todd Curry is actually doing a direct contract for our coalition. Each county would have to sign their own direct contract with them. In the healthcare industry, if you go look up some things called RBP, which we call reference-based pricing, it's a lot different. It's kind of where the world of healthcare is going, is that the PPO options have been out there forever, like a Cigna PPO option. Cigna PPO and any other PHCS or whoever it may be, all the major reinsurers, if we go and rent those networks, they're based on PPO discounts. Now, the average PPO, when you go out and incur a claim, that $280,000 may have been $800,000 originally when it was incurred. That's what we call bill charges through a PPO plan. And then that may be somewhere around 1,000% of Medicare. So I'm just throwing some numbers out there so that you kind of understand. We have data on all the hospitals that show that through a PPO option that they may charge 800% of Medicare, 1,000% of Medicare, and then they come in and say, okay, by the time it's PPO repriced and discounted, you actually ended up paying 250% of Medicare. Does that make sense? In other words, we have all that data. Well, the world of reference-based pricing is doing to control healthcare costs, it's direct contracting with provider networks. So they are coming in and they're building us a percentage of Medicare reimbursement. Now, we just did this in Mississippi for a large employer, and we ended up with 159% of Medicare, okay? Now, if I took every one of those claims that I'm talking about right there, $500,000-$600,000 worth of claims that were maybe under Cigna's PPO, was paid out at 230% of Medicare, and I pay those same claims at 159% of Medicare, it just saved you $250,000. So Todd Curry we're actually just doing our first contracting, but they've agreed to direct contracts. Now here's the caveat. This is where when we go in a healthcare coalition, and let's just say that we may have the Cigna PPO network setting up here so that any employee can pick and choose what they want to do. How restrictive do you want to be? Do you want to have people go strictly to the Baptist Hospital facility in Jonesboro, Crittenden County, whoever it may be, so that we're now reimbursing at 159% of Medicare, or going into Memphis and take advantage of the big Baptist system there? Do you want to build a program for steerage? And that's what we did for this other large provider. It actually was a hospital in Mississippi. And so what we did was went in and built a medical program around a certain deductible that would be waived if they would use the Baptist network. So it would give an employee an incentive to do that. Now, the incentive is that it would save you $250,000 on $500,000 worth of claims. You know what I mean? So there's an incentive and an initiative there as long as we can build those programs. That's one of the things that we're doing, which we're very excited about. We also have partnered. Pharmacy is a huge cost, and I'm going to give you an example. Out of the claims that have been paid today, and I can run a pharmacy report, but I'll guarantee you pharmacy right now is 22%. When we look at it across the board, it's about 22% of the medical cost, and it is driving healthcare through the roof. We partnered with a company here in Arkansas that owns its own pharmacy. Now, when we go out, we now currently have the Cigna PBM. That's a pharmacy benefit manager. So when one of your employees go down and fill a script, we're running it through that PBM network or provider. And whatever Cigna charges is what comes out of your program. So that you all understand the disparaging numbers that are in pharmacy today, and I'm just going to give you a quick 101, and I'm going to explain to you why this is so important for this coalition. But the average PBM provider, like a Cigna or whoever it may be, charges what they call an AWP, average wholesale price, minus about 15 to 17%. So we're getting 17% below AWP. Now there is pricing on pharmacy out there that is called 340B. 340B was established for rural healthcare facilities.
I was chuckling because you got so damn many acronyms and stuff.
I know. And Judge, this stuff just kind of rolls off my tongue because I do it every day, and I know it's confusing.
A little bit.
But I want to help y'all understand the importance of that. We priced out a vial of Humira. So if you have one employee that's taking Humira at an AWP minus 17%, that PBM provider charges $2,600 a vial. All right? $2,600 a vial. Through our 340B pricing on pharmacy, and this is why you see what's going on out there today in all the news, trying to curtail and try to control pharmacy pricing. That 340B pricing through our pharmacy is 26 cents. Now, that is ridiculous to be at 26 cents, and that is manufacturer's price is called MAC, and then that is about 21% below MAC. So that's 340B pricing. And just thank God I understand all this stuff. I mean, it takes years to sort it out and figure it out.
So are we getting that pricing through our coalition? Are we getting that pricing?
We are structuring that contract now.
Okay.
To be in place here very quickly. We're actually pricing out right now. We took a group. We actually took one particular group that was in the coalition. We sent it to their pharmacy to reprice their claims based on the Cigna PPO or PBM rebate, and it saved that one group $67,000 on the meds to date. That's a lot of money. And so here's the caveat to that. Go ahead, sir.
We need to, Kelly has some questions.
Okay.
And we need to let her ask you because she's ultimately going to be giving us the information we need, and she has some questions she wants to ask you.
Okay.
So Kelly,
Okay.
you have the floor.
My questions really don't have anything to do with numbers. It's just specific group questions. So if yours, okay. Well, I wanted to know who CareCentrix is when it comes to performance. A couple of employees have gotten bills from CareCentrix that are separate from, I guess, the Well, for example, one was a medical supply company.
Okay.
Someone went in to buy equipment. and they
Durable
were-
medical equipment?
And
Okay.
they were given a packing list, a list of that equipment with a price. And
Okay.
then from CareCentrix, they get another list with a different price that's in the form of a bill. So we did talk to, I think Jenna was on vacation, we did talk to Nathan about that, but we just want more explanation on that. If you have it, if not, then you can call us back.
Yeah, I'll have to call you back. I'm sure that that is a specialist or through durable medical goods that we get some discounting through this program. So I'm sure that's who that is, based on what you're saying.
Yeah.
But then let me just get some particulars on it, and it's called CareCentrix. Is that correct?
CareCentrix, that's correct.
Okay, all right.
I guess what worried us is that the supply company had a cheaper price than the CareCentrix bill that came.
Okay, now, when you say supply company, was that a place we could have gotten it from?
They actually walked in, got the equipment from there.
At the supply company?
Yes,
Oh, okay, but now, then you got a bill from CareCentrix?
for
Uh,
that equipment, that same equipment, yes.
Okay. But you're saying that when this individual priced out through the supply company a price, and then by the time it was billed to the program through CareCentrix, it was more?
Yes.
Okay, all right.
I can give you the name.
Yeah, I'll just have to research it
Okay.
and then probably see exactly what happened there. I don't know that. Yeah, that's just kind of a claim-specific sort of deal.
Another question was, with our group, if we have to be specifically with the same third-party administrator as everybody in that group, right?
Yes.
Everybody has to stay the same. So if performance is gonna be that one, I've had lots of requests for more detail on the EOBs. Employees aren't able to understand those codes on there. And it seems like there's missing payment information. They can't tell when a payment's been made to the provider, and so they're having to do a lot of follow-up, I guess, to make sure the bill's been paid.
Can you give me some, can I work with you on specifics?
Yeah.
Yeah, well, if you'll just help me understand it and see if there's some changes we can make to the EOB.
Well, that's one thing we wondered, if that was gonna be a possibility that changes could be made.
Oh, yeah.
With
What's the
performance.
EOB?
Explanation of benefits.
Okay.
That simply should show.
Send you when you don't have a.
Yeah, I just, they thought, like Chairman Nelson said, there's been so many acronyms.
That's CTOB. Changes to
The explanation of benefits can be confusing. I know that when people look at them. So let's just, you work with me and let's just take a look at one in particular that we were talking about and see what we can do.
And I think everybody is still adjusting to having the two, everything has to go through a double process, the Medihop and the regular, I guess, Cigna part. So it's.
Well, that's supposed to be seamless. That's supposed to be, you only have one card now, right?
We have one card.
Yeah.
But I guess the process of payments, the filing and the processing is taking longer, it seems like, and we're being told that that's probably part of it. Everything has to be done double. And then if you have a secondary, it's even taking longer, of course. But it just seems that we're having some of those complaints.
Is it that it just, is the complaint, because the employee shouldn't see any of that, other than is it that they're complaining it may be taking a little while to get through the process?
Yeah. So they're getting,
To the point of credit?
Bill.
No, it shouldn't be that.
I got one.
No.
Yeah, I got one too.
I got one.
Yeah, but I mean.
well,
when
you're
you-
gonna get a letter.
Yeah, you're gonna get letters.
But
You're always
as
gonna
far
get
as
that.
credit,
Yeah.
Credit and collection, I have not had one person tell me that any
Right.
of their stuff was sent to collection.
No, I haven't had anything sent to collection, but I did get a letter threatening
Threatening to do
to,
it,
I had 30 days or I
Was
was
it
going
from
to
St.
collection.
Bernard's?
I don't remember.
Anything
No,
office.
it was from our hospital here in the county. So,
St. Bernard's is our preferred, or their preferred hospital
Right.
for us.
but anyway, let me just say this, and I don't think a lot of it is necessarily on y'all's end. I think a lot of these
Oh, it's
medical
provider
places
Well,
are
that was one of my
are not
mistakes.
doing the billing properly. And as a matter of fact, like when I had knee surgery, the anesthesiologist office, I've never seen him before in my life. He walks in, he tells me what he's fixing to do. Well, he don't have my insurance information. So
That's
he's
right.
sending me bills, and he don't even know who my insurance is with.
That's right.
So that brings up another big issue. According to several employees, they said they never had this issue with Blue Cross or Qual Choice.
Not like that.
But all of a sudden, they're now having all these issues with their provider not billing correctly, not coding correctly. So they're having to spend time and put forth effort, and we're having to work with Jenna, and it's been an issue, to get the medical provider to bill it correctly so that Performance will accept it. A lot of things I think have been denied immediately. And then we find out that it's coding errors or filing errors or whatever that they're saying they never saw with Blue Cross and Blue Shield.
Well, you know, I've been in the business a long time, Kelly, and I have accounts, in my office, I have 17 ladies in my service and claims department, and they deal with this stuff every day. And it don't matter whether it's Blue Cross, Qual Choice, Humana, it's provider error. And if I could wave a magic wand and I could just eliminate provider error, my life would be so much simpler. What I don't understand is how in the world do people that don't have a service department like ours, how in the world do they even get stuff done and without someone intermediating for them to come in and try to sort it out, talk to providers, get the claims filed correctly? I mean, that's what we hear from 99. I mean, we have tens of thousands of people that we manage all over the country. So it's just not here in Arkansas. It's everywhere. But I mean, I'm not sure if a person. Go
I
ahead.
don't know what to tell people except that I can say personally, I had those same problems with Blue Cross.
I did
I
too.
had
Yeah,
those
so
same
I'm not.
problems with
I don't think it's
Qual Choice.
right.
You're saying the provider is the doctor's office, sent it wrong, coded it wrong, and sent it to the.
Yeah, I mean,
That's what you're saying?
Absolutely,
And an
absolutely.
insurance company
There's-
is not gonna pay
Not
it
gonna pay it?
if it's not correct.
Right.
They're
So,
looking for a reason of,
That's right. That's right. I'm not saying they aren't, but
the longer they keep their money in their bank, the better off they are.
yeah.
Oh,
And you gotta understand, yours is a little bit different too, because it's your money they're managing.
Right.
And so they're not just gonna go.
I'm gonna say this, just so because there's like a little bit of fussing going on, not a little bit, but anyway, no
no,
fussing,
there's
but
a
anyway.
lot, actually.
Well, I understand that because you're hearing it, I'm not. But,
Right, I'm having
But
to hear it.
I've not called you. I've not had to call you because
Right.
I've called this Jenna person, and she has taken care of all my stuff. I took all my medical bills and I mailed to her, or I scanned and emailed them to her, and she took care of everything. I did get some threatening letters, but I mean, I had knee surgery. I think my total bills were probably around $70,000. It cost me $500.
There you
So
go.
I ain't got a dang thing to gripe about. So.
And I think if the average person would do what you do and let us deal with it, I know they come to you, but I wish they would just not worry you. And that's the reason we give out those little card holders. I mean, you know, they have access to call our office, do exactly what you did, and I wish they would do that.
Too, because it's hard for me to explain, if they haven't called and tried to get it worked out, I can't help them either, and that's,
Kelly, here's the biggest thing that we see. Employees sometimes get frantic when they get a bill. They're gonna get bills. That's not gonna stop with Blue Cross, not gonna stop with Humana, not gonna stop with anybody. They're gonna get bills, but if they would take the time to read those bills, they would say that you don't actually owe this, it's just going through the process, there is a process. I mean, it has to come in, it has to go through the PPO provider networks, whether it's Blue Cross, Humana, ours, it doesn't matter. It's got to be repriced, the claim comes in. Some of those claims take 3-4 months to get paid. I can't change that. But I think people get a little frantic. We don't want people getting turned over to collections, and I would hate that for someone. But I would tell you that if someone does that, they should have contacted us way before, because there is a provider error somewhere. And if they don't call us or they don't contact us, it's not going to get sorted out. I mean, I wish I could give that person advice other than, and most of the time when groups have been with us for a length of time, the word kind of gets out. Get it to Jenna, get it to whoever it may be.
And we're still working through that. This is still just.
It's all new.
You know, everything's new. A lot of people don't like change, and everybody, I think, is still trying to learn the process, but we still have those people, you know, that are having problems. And I want to be able to give answers, and I do want to say one thing when we were talking about the comparison from the rate increase that you remember from last time. If you want to compare apples to apples, just know that that was going to be a very watered down benefit program for our people, a very high out of pocket for our people. And it was
A lot of things.
and it was a whole lot more per month. So that is something to consider.
Listen, I know, I'm just,
Well, Molly
I
wasn't
won't-
here last year. I know
right.
you were attended meetings, but I just want everybody to know that if you look at the whole picture and what our goal needs to be, this committee, is to get the best price and the best benefit package. And sometimes that's hard because you're trying to compare a lot
right.
of different things.
well,
So just keep in mind that there's a whole lot to it besides just the amount per month. And our people were to the point where they were calling us saying, we don't even go to the doctor because I can't afford to go to the
Out of
emergency.
pocket.
I can't, right. So we were hearing that too. This committee was hearing that. Back to Peggy's husband has had, I want to make sure we do address this. Peggy's husband had some, I probably shouldn't have mentioned names, but she's
I'm sure
here.
if I'm not on the list now, I will be.
But, well, specifically in her area, what she has had some trouble with was the doctor's office telling her one thing and then notes in Performance's file being something totally different, where maybe the doctor's office didn't actually call and say, and do what they were supposed to, or maybe they did, but they didn't follow up. But can you specifically check on a home health that's close to us that offers the 3 therapies, physical, occupational, speech?
All right, now are you saying they're not in our network or?
Right, the home healths that are in this area say that Cigna does not pay well enough for them to accept. However, we had one place close to us in Gosnell that said, we will accept Cigna's payment and we will work with you.
Oh, we'll do a direct contract with them.
Okay.
Yeah, see, that's what we do every day. I just went in, I did for Phillips County, right there in Helena. I went straight to the hospital there, Helena Regional, and I direct contracted with the CEO there.
For just one person or
For
for?
that entire group.
Okay.
So we went there and they actually, we went up, and that was Optum Health Facility, and I went right over to something Francis?
St. Francis?
It's not St. Francis, it's one of their hospitals that are a little bit more to the center and one of the areas over there. But we had another group that was fairly close to it. And so while I was working on Helena for Phillips, they contracted 140% of Medicare. So what we did for Phillips County and Hollowell Industries, that large swimming pool, Doughboy pool plant there, we went in and they were waiving deductibles to go to that facility. So if they go over there and have an MRI or CT, and then it was saving the employer tons of money because we were only having to reimburse at 140% of Medicare, not 250% by the time it's PPO repriced at 1,000% of Medicare. So this is all the way of the future. Yeah, all I need is the name of this company, and we'll just direct contract with them.
Well, that's
And-
what Jenna was leading us to believe too. And when I talked to her yesterday, the company, according to Performance's notes, didn't follow up with that. So now
Okay,
they,
I called out there this morning before the meeting, and she said that she did not call Performance or Jenna back. She called the case coordinator back at Baptist Health in Little Rock. That's where we were. Because she said that when she talked to Cigna, they told her that, you know, they were out of network and
Well, Cigna would tell you that.
and
Yeah.
she needed to contact S&S Healthcare. And they told her that she would need to call Summer Care Management.
Peggy, that's a perfect example of a screwed up mess. I don't mind telling you that.
That's
I
what
mean,
she
that's
said.
a perfect example of all we needed to do was if they had a call Performance, then, and if we knew to call them, how to call them directly, then I would just, I mean, I could probably pick up the phone and call them and in 2 seconds explain what we want, that your employees want to have access to this facility. They're not in a Cigna PPO. That's exactly what I did with Baptist. They aren't in a Cigna PPO network. So I just simply picked the phone up and got their entire Baptist network. So I can direct contract with them. So when y'all go now and employees decide to go to Baptist, then we reprice the claim in-house. So it doesn't have to go through Cigna.
She said she asked them first about just a one-time network, you know, I mean, that's what she said, one-time network. That's what she
Yeah.
wanted them to do.
Well, but Cigna's not gonna do that. And so the process went through talking to Cigna. They're not in network with Cigna. The only way that Cigna would have to reach out to them, which would take weeks or months to do that, even to try to get them in network, where I could pick the phone up and say, the county wants access to this facility. Would you mind doing a direct contract with us? It's a simple form, and they would simply, we would now put them as an in-network provider. We will PPO discount it when it comes in to Performance. We would bypass the Cigna PPO network, and you'd have access to the system.
Well, I mean, what am I supposed to do? We've been in the hospital for a month. And the case coordinator says, I've talked to Cigna, I've talked to the healthcare facility, this is what they're telling me. I texted Jenna, and I said, can you confirm that Gosnell Healthcare called you because they've offered all 3 of the therapies that he needed? I mean, the home health was out of the question because like Kelly said, they all said that they would not accept Cigna. So we bypassed that. So now we moved on to outpatient
are you
therapy.
okay? Are you in a
So,
hurry?
I mean, what was I supposed to do?
Well, I'm not saying you would have known, Peggy,
Right.
what to do, and
Now
you
they
know,
want to send us to Haytown, Missouri.
yeah.
Drive 35 miles.
I mean, all I'm saying is, and this may be something that, Kelly, we need to, my office staff doesn't know everything there is to know about how to go direct and do contract. I do all that. Yeah, or we have people that do that. So they may not, other than them being able to provide you that somebody's either in network or out of network, they can do that by looking you up in the system. And so if you get into a situation like that, I'd probably say that you need to reach out to me and say, Les, it's just like today. I mean, I'm sitting here talking to you. If I'd been talking to you a month ago, I could have probably saved us all a bunch of
Well, I mean,
headaches.
this all just happened last week. You know,
Okay.
We were getting dismissed on Thursday.
Okay,
But we are supposed to report to Hayti in the morning when it would be much simpler. for
Simply
us.
go right there.
Right, they
Yeah.
offer all three things that we need.
Yeah, let me, I mean, I can reach out to them today. If you've got a number or somebody's got a number, reach that, you know, if you'll do that. I'll be glad to talk to them on the way back today. See if they would be willing to just accept a direct contract and we'll treat them as in-network. Yeah, I mean, you know, healthcare is complicated
Are you
today.
telling Kelly if we have a problem that we just can't get resolved?
You need to call
She's free
me.
to call you and
Absolutely.
discuss it with you
And just so
Absolutely.
you know, I've done that.
Yeah, Kelly knows.
on her case?
Well, this just happened last week.
Yeah.
But
Right.
yes, she's had other things that happen. Not only do we call, I'm in constant contact with Jenna, but they've actually come here. They have scheduled days to just come here and sit with employees.
That's right.
They've got their bills in front of them.
I was gonna ask that question.
They do that. And
Yeah,
the
we wanna reach out.
The
We-
problem is getting people to come
Yeah.
and bring their
Well, it's
stuff.
just like the problem I had with, I didn't really have a problem once I called.
Right, right.
That's right.
But I can't get people to understand that.
Yeah, once I called, I didn't have a problem at
Yeah,
all.
one of my problems
They
is
don't come,
you have to
Fred.
call them every time, and you shouldn't have to
Don't
call
call
them
them.
every time.
Well, if you want
Well-
to make sure your stuff is filed correctly, that's just something you personally have to do. I don't know how many times I've paid bills that I didn't have to because I didn't read it, I didn't check on
You just
it.
thought, yeah.
It's just, if you want to protect yourself, it's just something you have to do because you can't trust the doctor offices and the people that are filing this. I mean, I've just learned that the hard way. And people don't want to mess with that. You don't have time to mess with that. But if you'll just send it to Jenna, I promise you, she will spend a whole lot of time on it, trying to get it worked out. She's done it for me. She's done it for a lot of people. It's just putting forth the effort to check onto it and send it to her. And
I would agree with that. I would think that you would have that issue with just about
When I had Health Advantage and Blue Cross Blue Shield for years with the state, and I had a whole lot of trouble. I faxed Jenna a stack of bills this big, and she took care of them. Like I said, a knee surgery that was $75,000 cost me $500. So, I mean.
Well, the thing about it is if you make that phone call before you have to go. But now in her case, she didn't know.
Well, this just happened last week,
Well,
so this is all brand new, but.
This is an ongoing thing.
But I can jump on it and try to get you some relief.
But you can-
That's all I can promise.
My problem was solved by making the phone call before I went.
I'm
Quick reflex.
And that's,
kids.
I was satisfied with the answers I got.
Well, I tell you, I've been overly blessed. The good Lord has blessed me to have a insurance service department that's second to none. I mean, those girls, and Jenna's as good as it gets. Those girls care about our people. They want to come up here. They want to schedule meetings. They want to allow people to come in and say, show us your problems. Let us help you do it. Healthcare is complicated, and I'm not going to sugarcoat it. I
the
mean,
bad thing I see
I think
is
that's one thing we all understand out of this meeting, is healthcare is very
oh
complicated.
a
yeah.
lot of people have had their problems taken care of. We still have some that are just unexplained to us. And so I think that keeps carrying forward. And, you know, I don't know that we can get an answer for that. But, you know, there are some people that are still just having some issues that they say they've never had before. And I don't know how to fix that, but
Well, is Jenna working on those?
she does. Yeah.
Okay. Kelly, I can follow up with Jenna today and see if there's something that I know is outstanding that maybe she may be having trouble with. Has Jenna already got these, or you
I
just?
think, yeah.
Okay.
But, I thought it was fixed a couple months ago, but it's not.
It's not? Okay. All right, let
And did
me,
you send yours to Jenna or?
Uh-huh.
Okay, and you.
I've always dealt with Jen. I've never had any problem except with that one.
okay.
Is it a specific provider?
It is a Pacific,
Anesthesiologist.
Anesthesiologist?
Yeah, boy, why is it always?
Because he's just what he does.
Exactly
He
what
comes
he
in and
is,
takes
just
pictures, and that's it.
I mean,
He
what?
don't have your insurance information,
I promise you.
his office is supposed to get it, but
You gonna take all that?
Oh, well, I thought you were giving, I'm
Just
sorry.
give me the back
I'm
one,
sorry.
see, there's 3 copies of it. Just give me the last one so I'll have something to,
Okay, which one do you want me to have?
you can have all of it here.
Can I have this here?
Yeah.
We need to go right
One
back to
single one. Okay, take that one.
Okay, thank you.
but I'm not on the committee. I can't make that
Okay, is
motion.
there anybody else, or do you have anything else, or
Ms. Nelson?
do you have anything?
No, I was just gonna say that we were told up front that really the renewal, prices, and this was like this with Stevens, but it's really about a 60-day window.
Yeah.
So we've gotta get closer before we get some true numbers, but we would like to shop and see what that's what I'm hearing anyway, is that we want quotes from everybody that
Yes,
you
that's-
can give us what.
Okay. I just hope you all will give our coalition a chance. And let me tell you, anybody can lowball you. I do it every day.
Services too.
Sir?
Services too. You know, it's not all pricing in
That's
that
right,
nature.
that's right.
Not always, no.
And so, I think with all the things that we've got, that we're putting in place, Kelly, there's nobody in the country that's ever put, you gotta understand the corridors and the risk corridors, the way this program works. I mean, you got a high deductible health plan with performance, which is the medical piece insured by Gerber. You understand why that is, because of that risk corridor. 84% of the claims that are incurred fall under $5,000. So if we have the medical setting up there with Gerber, and it's blocked and pool rated, we take our MediHop piece, which is the medical underlying piece, and we separate that from the medical. So it's another risk corridor. So we now I have tens of thousands of people, not just 200. I have tens of thousands of people all over the country in that, okay? So I'm able to spread that risk corridor because it's the biggest claims risk corridor. You're gonna have one or two that blow through, don't get just like these I mentioned. But the average claim is 84, the 84% rule applies. That means 84% of the claims occurred are less than 5. So if I can take that big risk corridor and spread it, but now I can turn around and so it's 3 circles here. You got medical, you got MediHop, and now we're carving out the pharmacy. So if I can take the pharmacy, right now, our new pharmacy company has given us, and we're negotiating this, but they're, instead of an AWP minus 17, which we have with Cigna, they've given us an AWP minus 40. So, and I know that says back to those acronyms again, but I'm just saying, I understand healthcare. I know that you've got to figure out a way to control it, and that's the reason. Y'all don't know everything that's going on with our company right now, but if you do a little research on a company called Seaman Holtz, and you do a little company on Blackstone Financial, you all may know who Blackstone is, but they're the big boys in the industry, billions and billions and billions of dollars. They have looked at this healthcare program that I built, that we market nationally, which is identical to this, and they never seen anything like it. I'm not bragging, I'm not tooting my horn, don't get me wrong, I'm just simply saying that I think we have found a way to redesign healthcare because of the risk corridors and being able to separate it and spread it and put the dollars in the discounting and direct contracting and all of the things that I can go on and on over. But my company is doing a merger with Seaman Holtz because they want to build the biggest, baddest employee benefits firm nationally through Blackstone that is out there. It's the biggest opportunity I've ever had in my career. I will be running that employee benefits division for them. We will be the service hub for that out of Mississippi, right there in my location. We're so excited about this. And when I get people like Blackstone and Seaman Holtz behind my ideas and thoughts and where we're going, there's no telling where you can go, because they bring the reinsurance world. They bring all the players in that we could possibly ask for. So I just wanted to share that with you all, and the excitement we have, and Seaman Holtz connection and going forward. And so that's kind of where we're at, so.
Okay, let me say, based on what Kelly said, you as, I don't see you as paid by us, but you certainly get a commission on what we do. We want you to market our
I
product.
will.
We want the best price,
Okay,
whether it's with Performance or whoever, we want the best price. If you have to raise the deductible a few points, tell us.
okay,
But we want you to bring back a program prior to, we're in our budget cycle right now, we're about almost
It'll be
finished.
November before we get.
I think there's police report in there
Be
too.
November.
I don't think I have enough.
So,
okay. Let me give that back to you.
as long as we get something by
Yes,
the
sir.
first week in November,
Okay,
we get back together with some finals.
There you go.
You say best price, but we also want the best service.
Well-
I mean,
Well,
that's,
and I said that.
yeah, you did,
yeah,
yeah.
I mean, but we also, we want quality service, and we also, and when you say the best price, I mean, like I said, you want the best deal for the employee too. I mean, as far as his out-of-pocket expenses after any medical event.
We don't want our employees to
I've been
feel like
very
they can't go to the doctor.
That's right.
Thank you, thank you. I'll tell Jenna, it always makes the
Great.
girls feel good to hear you talking, and
Yeah.
thank you, thank you.
I have a personal question I want to ask you.
But I,
That'd be fine.
I certainly do appreciate you all talking. It makes me feel good to know that my service department is efficient and working for you all. I promise you
Yeah. Janice?
that I will do everything in my power to bring you the best healthcare out there. I am a consultant. Brokers come to me. That's what they do all over the country. So I build, design those plans and put them out there, and I shop and do everything that you're asking me to do. So we'll look at it, and then we'll come in and sit down with you all, and you ultimately make the final decision on what you want to do. But we certainly do appreciate you saying what you did about our service department. That means a lot to me.
Make sure you get that number from Peggy, because we don't want her to drive high time.
I am.
Okay. If nobody
I have that
else
problem.
has anything, we're adjourned.
I just did.